Hit record. Hey, what's going on, guys? Edgar Franco here, mortgage broker in the Central Valley here in California. Been doing this for several years, and I'm just making a video here to kind of give you an introduction of what it looks like when you talk to a loan officer for a first time, or maybe it's been many years since you last spoken to one. You bought a house and you've been in the house for several years. I don't expect you to remember everything. So I always like to start from scratch to take a look at your current situation, what you're looking to get into, and then build a plan around that. So, I've been doing this long enough to know. I mean, I've seen everything. Okay. Good credit, bad credit, no credit, crazy income scenarios, self-employment, no income and down payment assistance, no down, like just think of it. Like I mean, I can think of every scenario that I've seen. Um, but I've been doing it long enough to where I can talk to somebody in 10, 15 minutes, understand their situation, and then build a plan around that. Without looking at any income documents, without pulling credit, I can give you a really good analysis of what your future looks like when it comes to buying your first house, second house, investment property, whatever it is. Now, when you talk to a loan officer, like let's just get straight to the point, right? The top three things that we look for, number one is credit, two is income, and three, the down payment. All right, credit's super important for many reasons. Number one, the bank obviously wants to make sure that you can qualify or repay the loan, and by confirming that, they look at your credit history. How has it been for the last 12 to 24 months? That's probably the most critical time frame that they're looking at because sometimes you can have blemishes from 3, 4 years ago. But then if you reestablish your credit, that lets the creditor, the banks know that you're in good standing and you're going to be good to pay them back just because for whatever reason you had a credit event, whether you maybe lost your job, maybe you moved, it moved back. So who knows? They may or may not even want an explanation. The most important thing is how have you been with your credit within the last 2 years? So, and also your score. Your score is going to determine the program, the interest rate, things of that nature, which by doing a soft credit check, we can analyze where things are currently sitting. And for the most part, like sometimes that's all we can, like we can do everything with just a soft credit check. We don't have to do a hard inquiry. A lot of people are scared to getting your credit pulled, but the biggest myth is if you pull your credit with a mortgage company, it's going to ruin your score. Well, in reality, it only impacts your score a few points. For example, like, on average, what I've seen it hit, it's like 3 to 5 points per bureau on average. But it's super important too to do a soft credit check up front because if you're, let's just say you're right at the cusp of 700, maybe you're at 698, but then maybe we see that you can pay off like a small department credit card that can boost you up another 20, 30 points, might be worth it, those are things that we look for to improve your chances of getting a better interest rate, and other things like that with a higher credit score. You don't need perfect credit, but we just want to see, like, I personally want to see where things are at because I've seen enough credit reports to understand what the banks want to see in order to give you that final approval of your loan. So, that's a quick overview of credit. Simple question. Have you been monitoring your credit using Credit Karma? That helps to kind of get an understanding. If not, I always recommend that we just do a soft credit check. Next thing, income. Like, what do you do for work? How long have you been doing it? Have you been jumping from different trades within the last 2 years, like multiple times, or have you been in the same trade, just maybe jumping jobs? Do you get overtime? Do you get bonuses? Are you full-time? Are you part-time? Are you salary? Are you on family leave? Did you just have a baby and you're taking time off, or did you have an injury? All these questions. Oh, are you seasonal? Do you get unemployment? Which you can use unemployment as long as you have like 2 years history. I'm not gonna go down all the rabbit holes, but I'm gonna tell you like these questions I like to ask. Are you getting alimony, child support, or are you paying it? Like these things matter. Um, so, income, are you self-employed? How long have you been running your business? Have you filed your taxes this year? Or are you on an extension? There's just so many questions that I like to ask up front to get the answers for you. And within a few minutes or an hour or two, I can just figure it all out for you. So income is super critical. Typically, we want to see a 2-year work history. The reason behind that is we want to prove your willingness to work. Like, are you capable of working? And if so, have you been working? And if you had any large employment gaps, we want to find out why. Were you injured? Did you go overseas to visit family? Or did you just take a break? Who knows? Like sometimes if you have large gaps, we can still use your income. We just have to be able to explain it. And but yeah, I mean there's so much to cover, but again, everybody's situation is different. Your scenario is unique to you, but I've been able to solve mysteries, like how are we going to make this work? Because a lot of people sit back and don't even attempt to talk to a loan officer because they think they're not going to qualify for whatever reason. And I can assure you that everyone can qualify. And if you don't qualify now, what do we have to do so you can qualify later? The third thing, down payment. Where's the money at? Is it in your bank account? Is it in your girlfriend, boyfriend's bank account? Husband, wife? Are you getting a gift from your parents, your grandparents? Or is it in your 401k, which you can use? Are you selling a car and you're going to bank off that? Are you selling a property? Are you looking to sell your home that you outgrew, or maybe you're downsizing to buy the next home? Again, series of questions. Everybody's situation is different. The rule of thumb is if it's cash on hand, you can't use it, right? You have to put it in your bank account and wait, usually 30 days before you can use it. It's called seasoning your funds. But there's other things you can do. Let's just say you just want to hold on to that money and you have a grandparent or a parent that wants to gift you the funds for a down payment. We can go that route instead. Um, let's just say you don't have any money at all. Like you got $500 in your bank account. A lot of times I tell my clients, like, if you only have limited funds at this time, we usually like to see our clients succeed when it comes to homeownership. And we don't want you to be in a financial situation where you're going to be house poor, is what we call it, right? That's the term that most people recognize, being house poor. I don't want to be house poor. No one does. But you kind of put yourself in that situation when you get into a position where you may qualify for down payment assistance, where it covers your entire down payment, and then you have the seller cover your closing costs, where then in reality you're coming out of like zero out of pocket and you get the whole entire loan approval. Because at the end of the day, it's easy to get approved for a loan, but now your financial stresses can come after home ownership. So if that's something that you feel like you're okay with doing, because at the end of the day, I'm not a financial advisor. I just give you the loan, right? And give you advice on which product to choose and move forward with. But if you feel like you're going to be able to do it, maybe your significant other has a side hustle or you have a side hustle that you can manage, well then, yeah, let's do it. But I like to see at least 1 month or 2 month reserves in your bank account, meaning when it's all said and done, let's just say your house payment is going to be $2,500 a month. If you at least have 2,500 or $5,000 sitting in your bank account once you take a home or ownership of the home, that would put you in a pretty good spot because now you have two payments saved up, right? So at the end of the day, the decision is yours, but I'm just giving you advice on what I think would be best. Just being in the industry for so many years, that little cushion makes a huge difference. So again, it's pretty straightforward. These calls that I have with clients, new clients coming in, um, 10 minutes, 15 minutes, like think about how long it'll take you to answer those questions. And the questions are pretty tailored to your scenario. So depending if, you're self-employed, you're a nurse, maybe you were a construction worker that is part of a union, everything is going to vary based on your situation, but I have the experience to figure it all out for you and set you up for homeownership, whether it's your first home or your next home. Thanks for watching. My name is Edgar Franco. I'm here in the Central Valley. Have been serving the Valley for nearly a decade with mortgage services. I appreciate you. Hit that like button, hit the subscribe button, reach out for any real estate questions. Thanks.